What's good, guys? It's Krabby Trades here. Welcome to a new video. Today we're going to be going over multi-time frame alignment on NQ. Essentially, these are areas of point of interest / POIs where I look for my models, my entries, just my areas that I look to long or short off of, which imbalances I like to trade off, which fair values, etc., etc. A lot of people struggle with, oh, we have multiple fair values here. Which one do I look for my point of interest to form the model in? So today we're going to be going over that, and let's get straight into the video. Now, let's quickly get into what is multi-time frame alignment. Essentially, multi-time frame alignment is from imbalances, order blocks, whatever you trade in the higher time frame. We typically use the 4 hour, 2 hour, 1 hour, and then lower it down to the 5, 15, 30. And essentially, we look for the alignment between fair values and all these higher time frame imbalances. Essentially, what it does, it makes sure you're trading in sync with the dominant narrative of the market. It's a key part of ICT that improves trade precision, buys clarity, and obviously risk reward potential. So essentially for me, this is areas where I look to form models. If you guys are trading with imbalances like fair value gaps, imbalances obviously occur when we have large buy sequences, sell sequences, with little to no overlap between the wicks in between. So essentially this indicates inefficiencies in price delivery that often are caused by aggressive buying / selling. Now with multi-time frame alignment, key time frames that I obviously like to use are 4 hour, 2 hour, 1 hour. So higher time frames set directional bias, look for macros, for value gaps, breakup structures, PD array, premium, discount, whatever you like to trade. On the medium time frames, you could look for confirmation of trend, short-term structure shifts, identify fair values that align with the higher time frame bias and imbalances. On the lower time frame, then we use point of interest, so used for precision entries, and refining my timing. So essentially, you'd form your model in the 1 minute. I typically use the 1 minute. If you use the 5, use the 5, 15, etc. And essentially, we use those internal ranges to really pinpoint the area that we look to take our model off of. Now, benefits of alignment with imbalances are higher probability setups, better context on which fair value gaps to take, obviously, and most likely to hold. It's a clear narrative into macros as well. And obviously avoid trading against higher time frame order flow, which is super important. So let's get straight into it. Now, starting with page 1, as you guys can see, we have a external low taken here. We have the external high taken here, and then we have this imbalance that sits in between. Now, this imbalance here with the shift is a multi-time frame alignment, because in the next slide, I'll show you exactly why. So in this area here, we are in bullish order flow. Once you're in bullish order flow here, where the multi-time frame alignment sits is where I'm going to look for my point of interest. So I need a model to align around this area here. And for example, this fair value here can provide you with your buy sequence with the inversion to target the new engineered high. Now, some people would say, Krabby, but why don't we wait for this low here? Now, this low here, which is from the previous slide, would make sure that my order flow, my bullish order flow, continues, because I need to fail to seek this low here. So some people would look at this as SMT. In this case, I'd do a failure to seek low, since it's an individual market behavior. So essentially, you have a good sell sequence into this internal liquidity after you took your external high here. Now, this is completely fine. So this would be my new area of interest, not this low. I preferably want this low, manipulate this low, shift in structure, and then look for either an inversion model, continuation model into that new engineered high. This works best with bullish order flow. Now, next slide here, when you do have a shift in order flow, for example, a shift in structure, continuation, a lot of people struggle with where the area that price wants to obviously retrace into to expand and displace lower to create new lows. So essentially in these areas here, you'd want to watch that previous structure low before you have your sell sequence lower. So in this case, it'd be around this area. Now, this previous imbalance here did get filled, so most likely I will look for the one closest to that previous structured low. Scenario, it would be this fair value gap here. Not this one, not this one, this one. This is the closest to the structure low. Now let's see if we align. This is the 5 minute. This is the 15 minute, perfectly aligning. This is the 30 minute, perfectly aligning. Manipulation, manipulation, failure to seek, failure to seek. Same for value, same area. Again, 1 hour time frame aligning, 1 hour time frame, 2 hour, 2 hour. Let's continue. And this is your full draw. So make sure you have liquidity sitting at the low. Fair to seek high, shift, manipulation, inversion, straight to the lows, and the fair value still aligns in between. Now, once you identified your point of interest, you then want to go to your lower time frame and look for a model to form in between that. So this box here was these higher time frame alignments into obviously one area. So we have manipulation at the high, failure to seek, shift in structure, manipulation. We failed to displace above that previous structure high, inversion, straight to the low. So this is essentially where I look for my area of interest. It's so important. Where do you want your model to form? Super, super, super important. If you are struggling with either building a narrative or just finding areas of interest where you want your model to form, or maybe you're taking your model too early or too late, this is key. A lot of people are missing this. Multi-time frame alignment is your best friend. I'm telling you, all these inefficiencies need to be filled. We displace lower, have a buy sequence higher, create that new high, engineer that new high, and then in bullish order flow, you displace lower, fill the imbalance, and then continue higher. Now, if you have two pools of liquidity that didn't get taken, essentially I'm going to wait for either one of them to get taken out. So essentially you have your external low, external high. Now, once the low or the high gets taken, and by the way, this is only if you're unsure of which order flow you're in or which bias you have. Me personally, I'll wait for the low to get taken and I'll watch for price to see if we displace above that previous structured high. Now, price fails to displace above that previous structured high with your imbalance sitting in between that. You want to make sure that you create a lower high, fail to seek with some sort of manipulation in between. Now, a short around this area will only work if you have a higher time frame pool of liquidity sitting lower. So in this case, you did, and you had the full external low sitting in between here. This is where you form your model, and there you go, another continuation model sitting straight for that low. So watch order flow, watch strength, watch the displacements. Now here's another slide ready for you guys to go. This one will be trading with precision, multi-time frame models. So essentially same thing in a buy sequence, bullish order flow, manipulation, shift. Now look at this for value sitting in between, this imbalance. Look how perfectly we tapped and go. So that new engineered high here, I only like to trade into it once we rebalance price. So this is the 4 hour. Look at the 2 hour, perfectly lining in between, inversion, fair value, straight to the high. Again, 1 hour, inversion, fair value, straight to the high, multi-time frame alignment. Again, 30-minute, multi-time frame alignment, inversion, fair value, straight to the high. Again, now you know exactly where your point of interest sits. This is the 5-minute fair to seek low, shift, manipulation, point of interest, higher time frame imbalances, and then 1 minute for my model. Fair to seek low, manipulation, shift, inversion, straight to the high. That is it for point of interest. It will help you with your timing. It'll help you with your models. It'll help you with your narrative. It'll help you with literally everything. So most people are like, okay, maybe I want to long around this area. We're bullish. Nope, you get stopped. Maybe I want to long around this area. Nope, you get stopped. Point of interest is super, super important. It's where you want to form your model. Now let me show you a chart example. So essentially here, we're going to look for a buy sequence with a daily fair value gap to be created. Now you don't essentially need a daily fair value gap, but preferably I'd like for most of them to align. Now once you create that daily fair value gap, dump it back down to the 4 hour. So now we know that this area here, we need to have an aligning fair value or obviously imbalance, which we do. And that's always at the previous structure high that I prefer to take it at. So let's continue. So there's the retracement into it. Let's see if we align on the 2 hour. So yep, we have a 2 hour for value. Let's see if we align on the 1 hour, 1 hour for value, 30-minute, 30-minute for value, 15-minute, 15-minute manipulation at the low, 15-minute for value sitting between, 5-minute, nothing on the 5. So we have most time frames aligning in between. We have manipulation at the low. What will I look for here? So essentially once we manipulate the low, we tap this multi-time frame alignment, look for that previous shift, look for the largest inversion sitting in between, drag that out, and then you could look for maybe a higher time frame shift in structure. And then if you want to do a lower time frame or higher time frame imbalance for a shift, that's completely fine. So maybe you'd like to rebalance first. So go on the 1 minute, There you go. So you have your buy sequence here, your confirmation, your shift in structure. So if you do like maybe to take only continuation models into new engineered highs, that's completely fine. Look for a manipulation at the low. Look for that inversion sitting between. And there you guys go. So this would be model number 1, closest to your point of interest, right? Again, if you'd like your model right at that point of interest, you look for that shift in structure sitting around that area, displace above, inversion, perfect, BPR, perfect, and there you go. Another model ready for you. Targeting this first internal high, and the rest obviously right at that external sitting here. So this is literally how I find my point of interest. It's the best way to do it in my opinion. I found so much success doing this. If you guys have more questions, please put them in the comments. If you want to learn more, join the Discord. It is free. So yeah, hopefully this helped you guys out. Thank you so much for watching. Like, subscribe, and I'll make sure to post more videos.